these contracts, some of them will only be out there for 2 years. Like the max will be 2 years. So if you get in from 2022, you're not going to get a 2025 expiration in 2022. You only get 2024 expirations. So as it keeps going and your contract is getting ready to expire and you are up, you can roll it, right? You can roll it over, or you can sell some and buy more time if you believe there's still room for it to go. You making sense? So based on where we are, if you want to, and this doesn't mean you can't do weeklies or you can't day trade it or you can't swing trade it. You can do whatever you want to do. It's up to you. But if you want to maximize, then you got to buy yourself enough time to make that realistic based on how it's been moving or how it typically moves. Making sense? So, and at some point when you are into, right, this is another thing you have to look at. Let's say you get into Lulu here. You don't expect it to, like, because you got in here, you don't expect it to just do this. To just go vroom. Let's say you get up to September, your expiration is at September or December 2027 or whatever. It's not going to move like this, right? This is what your brain will tell you. Or this is the expectation you're going to have in your head. That is going to go like this. But as you can see, it's never gone like that. Even on the way down, right? On the way down, it came down here, went up, then came down. The same way on the way up, it didn't go up in a straight line. It went up here, came down, went up, came down, up, down, and then once it got here, it got pushed down. Then it worked its way back up here, then down. So in the same way, it can do this, go up, come down, maybe even come down, further down, start moving, come down, go, come down. So you need to have a realistic expectation for how markets move, right? So you can understand that in 2 years, if it's going to make it up to this level, it's not just going to go in a straight line. It's going to go up, it's going to come down, it's going to go up, it's going to come down. And there's also a possibility that it fails and it doesn't go up, right? So do not rule that out. That just because it's at a COVID low doesn't mean it cannot go lower. It can go lower. And if it does go lower, the next level of rational support is likely going to be at 114 zone. If 114 doesn't hold, then 80. So if you analyze the market like that, you basically looking at all possibilities, right? It can go up, or it can fail and come down a little bit before going up. Or it can fail and come down a lot bit. Right? So you already have realistic levels that the market can pull down to. If 169 doesn't hold, 114. And 114 is a range. It's a demand zone. It's a support zone. It's not a fixed number, right? If 114 doesn't bounce, then we go down to 80. And if you plot your levels well, one of the levels will get respected. And on the way up, you can face some resistance around 260, right? Why would you likely face resistance around 260? Anyone? Hello? Anybody home? Knock, knock. I'm not talking to myself, am I?
No, I'm here.
Okay. So,
I wasn't talking.
why will we likely face some sort of push down or resistance or hit our head on a ceiling around 262?
That's the next level of resistance.
Why?
Because it failed to break past that level last time.
Which last time?
The most recent time, I think. Wait, no, sorry.
Nah, because it was the support, right, Black?
Yes. So, Cash, you got it fucked up. So, this was resistance, right? This was the peak before the COVID drop. Correct? You can see that. This was February 20th. It was the high. It was an all-time high, February 20th. And that was a resistance level. It hit it. That's a ceiling. It got pushed down, right? And then it broke, went up. Then when it came down, that resistance flipped to what? Support. Correct? Right?
Yep.
Then it went up and tried to make a new high. It couldn't sustain, came back down, and it rejected from the same support, right? So this is a second touch. It tried to break, it didn't hold. So it bounced in 2022, then it bounced again in 2024, tried to go up, came back down, bounced again, right? But this time it couldn't make it up. So if you look here, the highs were getting low. You see that? It's been trying to catch up to this high. But every time it tried, it couldn't make it as high. So that means it's been trending down. So when this level broke, this was support. When support flips at a solid level, it becomes what?
Resistance.
It becomes resistance. So it was resistance, then support. Now that the support has broken, if it makes its way back here, this could become a level where it gets pushed back down. See that? You making sense? So if you get in at 169 and it gets up to 265-ish and you have 10 contracts, what are you doing? Are you holding it all to 470 or what are you doing? At 256 or 260 zone, what are you doing?
Take a profit and leave in a runner.
Take some profits until it breaks, retest, and the support holds again, right? Because if it doesn't retest, it can break and cut back through it like butter and be right back down. And you don't want to get caught up like that. So you always wanted to break, retest, and that will be the confirmation that the level has flipped from resistance to support. Without a retest, you're not going to know that it has flipped. You get it? Yeah? Yeah, okay. So, that's Lulu. Let's see what else we got. So, we got Lulu. We got Meta. And if you see, I use a line graph to really help me out to see a clear picture. So, Meta, if you want to go heavy on Meta, you want to go in like so. You see where Meta goes up. This was a resistance zone, right? Zone, as you can see. This is a zone. Resistance, resistance, then resistance breaks. If you want, you can decide not to chase it. If it breaks and it goes, I mean, as a matter of fact, here it broke and it retested. But let's say you missed out. The market will almost always give you another opportunity to get in. It might take weeks, it might take months, but it will always pull back to a degree. Nothing goes up forever without taking a break, right? So when it goes and it comes back down to that zone and it holds, this is where you load the boat. So this was Meta at 500. Remember, it went all the way up to 740 and corrected about 34%. But the 34% came down to a zone that had been respected before, a year ago, right? Or more than a year ago. This was a 2024 September level, right? 2024 March level. So the fact that it went up this much and it came back down and respected that same level, this is a very important level or a good demand zone for you to buy on the way up. So that's Meta. When markets are at all-time highs, personally, I don't like it. That is not my style, right? It's not my style. It doesn't mean it can't continue to go. I gave Meta a price prediction of 1,000 when it was at $80-something. And we are not too far away from it, right? But as you can see, it's high. It's trading at an all-time high. However, if this level breaks, it will likely continue to go. But if you have shares, it's one thing, or you day trade in it, that's cool. But leaps, I don't know about that. Google, we did the same thing. We got in Google. I put it out. I said, watch Google on a weekly chart when it was at 170. And if you go back, Google on the weekly, this is exactly where we were, right? Again, same thing. It went up to this level, right? Resistance, came back down, touched support, came up, made a higher high, came down at the same level of support, but this support also used to be a resistance zone, not once, but twice. So November 2021, this 150 zone was a peak. It was a ceiling for Google. It went down, came back here, tried, broke, tried, then it became support. Made a higher high, tried, then it bounced. So now this high has passed the previous high, right? So if it comes down again, what will be a good level to load up on Google? Looking at the chart.
$200.
Looking at the chart, let me see, it might be right. So it'll be more like here. You see that? So first pullback zone, because you always want to give yourself options. So first level will likely be here. 206, right? That'll be at 20% correction, which puts it almost in a bear market territory. So from where it's at back to 20% down. Then at that point, if the price action looks good, you buy it back up. Because if the pattern continues, the next high should be higher than the previous high. Let's say, I'm not saying this is the peak. I'm just saying, looking at how it's been moving, right? From here, the highs are getting higher. So if it pulls back down, it goes up, it's likely going to break this high. Then this high becomes the new support. You know? You get it?
Yes, sir.
Keep it simple. Now, if it comes down, right, and that level doesn't hold, then your next level to look at will be around 192 zone, because it might cut through 205 and not respect it, right? If it doesn't respect 205 205, 207, then you start looking at 190, 191. So you already, when you're watching it, you have different levels to watch. It's not like, okay, this is the only level. Because your first level of support, the market might not respect it for whatever reason. Then you go to your next level. So let's say you get here and it starts to respect it and you buy. You may buy and it may do this. You don't get out because it ain't go. You buy some more here. Because ultimately you are bullish on it. So just because this wasn't the bounce that takes it up, you already, when you are analyzing it before you put money on the line, that is when you are most objective, right? When there's no money on the line, you can see clearly. When you wait and you put money on the line, your vision is not to be trusted. You start seeing things that are not there. So you want to make all your observations and your calculations and your risk assessments when there's no money on the table. Because when there's no money on the table, you can see things objectively. When there's money on the line and you're losing, you start thinking with your emotions. You know? So you already look at it, okay, Google at 205, I like it. I will buy. If it goes down to 190, I'll buy some more. If it goes down to 150, I will load the boat. And so long as you have enough time And so long as you know it's Google and there's nothing wrong with the company, it's only a matter of time that it turns around. But if you don't buy enough time, that is when you start praying and shit. You know? So, that's that.
Load the boat. What's your load the boat price again? I'm writing this down.
150.
150.34.
No points. This ain't Ian Dunlap. This is 150, but it's a 150 zone, which means it could be 156. It could even be 145, right? So you can give yourself a $10 room. You can give yourself $5 up, $5 below your zone, or $7 up, $7 below your zone, right? So if it's 150, it could be 157. If that level shows you solid price action, you don't have to wait until 150.02. The market doesn't care about your decimal points. It's a range, it's a zone. So if you focus on the big picture, you know that, okay, this used to be a resistance zone 152 in November, and it's been tested a few times. So if Google ever comes back down to that same area, it may bounce at 157, it may bounce at 159. But anywhere here in this zone, I like it. So it doesn't have to be 150 flat. Doesn't have to be 150.20, even at 157. So long as I know I'm buying it in that 150 zone and I'm likely going back to 250, I don't give a damn if I leave $2, $3, $5 on the table, right? Because I'm looking to make $100. So $2, $5. I'm not gonna, because of two, I miss out on $9, knowing that I'm looking to make $100. Why would I be worried about whether I miss out on $5 or I pay $5 more or whatever, right? You look at the big picture, especially if it's a long-term trade. So. Somebody said, can you explain 3-to-1 risk reward? I think somebody explained it. You're risking $1 to make 3. You're risking $100 to make $300. You're risking $1,000 to make $3,000. You're risking $10,000 to make $30,000. And every trade you get in, you should see the potential to make at least 2-to-1, at least more than what you are putting up, based on price action, not based on whatever you wish, right? The market doesn't care about what you wish. That's why we use levels, right, to give us some edge or increase the likelihood of it going to that zone. It's a game of probability. You get it? All right, let's see. You put your stop loss under, depending on what you are doing. So if you're doing a put, your stop loss will be above resistance. If you're doing a call, your stop loss will be below support. Give me a second. You got it? So it's not based on what you think, or it's not based on just percentages. It's based on support. So if I'm buying here if Google is here, let's say we do a replay, right? So this is let's say this is real time, right? Real time. I'm watching Google. It comes to this level. I look at my price action, right? I know it's bounced at this level a few times. I know it was resistance at this level, right? My stop loss will be below this level. So if 140 is my support and I get in, my stop loss will be underneath here, or my stop loss, I may even put it underneath the previous swing low. So these are lows, right? These are all lows. So you can put your stop loss under a swing low. But if you are options trading, especially if you're doing swings or leaps, you have to give yourself enough room for your stop loss. You can't have a tight stop loss on a trade that you are trying to get 300%, 400% on it. It's not going to work. So if you are afraid to lose, then don't play the game. Or if you're afraid to lose, then have the right position size. Don't put on $5,000 and then be quick to cut it, right? If you don't do the proper position sizing, risk management, then don't get in, because you're gonna cut it too early on a trade that will turn around and likely make you a lot of money, and you're gonna cut it because of fear, right? So the way you look at the way you trade you day trade is not the same for swing trading, because you may be able to draw down 60% and it's okay, so long as your stop loss zone has not been violated. Nobody cares about the percentage. If the percentage is, your contract is down 65% and the stop loss is nowhere near being taken out, you buy more. Especially if it's giving you a reason of, rejecting or turning around or whatever, however you want to put it, right? So there's more to it than just having a fixed stop loss. Oh, if it gets to minus 50, I'm cutting it. Nah. That ain't how to play the game. You might cut it at minus 50 if the minus 50 coincides with a level that proves that this setup is wrong. Otherwise, why are you cutting it at minus 50? Is it based on money? Because, the minus 50 is $3,000 and I can't afford to lose, then you shouldn't have gotten in that position in the first place. If you can't afford to see the position go down minus 60, that means you over leverage. That means you took up too much. So if you know that I'm holding this position, it can draw down 60%. And if it draws down 60% and my stop loss on a technical level has not been taken out, I should be willing to buy more, especially if it's a leap. If you don't have the bread to do that, don't get in the first place, because you can't afford it. You're trying to buy something that you clearly cannot afford. Wait for something that you can afford. If it means you miss out, wait for it. Because if you can't afford it and you get in, you're not going to be able to allow it to do what it's designed to do. We making sense? So there's more to stop loss than just, all of that. And options is not like futures or Forex. There's so many variables, IV can crush and then your contract go down and you cut it only to turn around and see it pop because your levels were still valid. So you need to have a strong understanding in the game before you start putting up money you can't afford to lose. You feel me? All right. Somebody asked some questions. All right. Now we are looking at Lily. So Lily, as you can see, this is one that hasn't really taken off yet, right? But Lily is down about 23% from its high. And if you look at the level where we at right now, it's a support zone. Can everybody see it? This is April retest. So we have April retest right here. We have actually November retest. That's the same zone, not a price.
Tap and hold your glasses for number of viewers and most recent comments.
Shut up, Meta. Then we have January retest, that same zone, not a price zone. And we are still in that zone right here. So this is a zone. All right. If that level doesn't hold, we could look at this zone, like right here, 600. 600 doesn't hold, we can look at here, 530. 530 doesn't hold, right here. If that doesn't hold, 312. You know? So you go in knowing where all the levels you can likely make moves from. You know? You got me? So this, it ain't going yet. But Lily, if you try to play it the right way, it's gonna cost you. So if I'm looking at Lily, even though it's close to its support zone, the price action will not tell me to buy yet. Why?
Bearish candle, momentum candle.
Yep. It's too strong. The gravitational pull is too strong. You don't want to jump in front of a moving train. Right? It's too strong. So you can go down to a lower time frame and monitor, right? It's too strong. It's not telling you, it's not giving you any sign of reversal. So it may have to come down a little bit more, maybe 720-ish, because in January it bounced from 725, right? Then November of last year, oh wait, hold on. I'm in a replay, because I know it went lower than that. The fuck am I looking at? I know it went lower than that. Okay, yeah, it went lower than that. I was in a replay. My bad. Okay. I was in a replay. So, okay, look. That's even better. So, you see the replay that when this level didn't hold, right? When this level didn't hold, where did it come down to? The next level, right? You see the next level? Right here. So your initial, let's say you are like, oh, this is support, right? You wouldn't have gotten in here because, or if you got in here, you lost money. Let's just say you got in here and you lost money, right? You would have known to wait until it comes down to this zone right here, which it didn't really touch it on the weekly. But if you go to a lower time frame, you probably would have seen some reversal happening, right? On a lower time frame, probably would have seen some reversal, something like this, right? Then it broke up and it started going. So now where we at, it has broken above that support, right? So now we are basically waiting for a retest. It's broken above that support. So it's above the level that was hard to break, right? It broke, came back. It didn't come back down. It actually broke above it, retested, and now it's back on its way up. So how high can it go? Let's see. How high can it go? We are talking 972 is the high. We at 750. So over $200 away from its all-time high. And this is how it looks. So if you're looking at it, even on a 2-week, what type of price action do we have on a 2-week? What type of price action do we have? Bull flag, right? So there's a bull flag on a 2-week chart. This is 2 weeks. So you can't get in and think it's going to move in 2 weeks, or it's going to move in 1 day or in 1 week. You got to give it time, right? You have to give it time. So if you know you can't afford to give it time and trade it properly, then you leave it alone, because the contracts are expensive, especially if you're doing it the right way, right? If you're doing it the proper way, it's going to cost you. If you can't do it the proper way, leave it alone. Because if you put a lot of money in this and it starts to consolidate, you're going to panic, you're going to sell, only for you to watch it break up and go. So know what you can afford and what you can't afford. And if you can't afford it, leave it alone. Or if you decide to get into it and get a shorter expiration date, that makes it a high risk trade, right? And your probability of winning diminishes because you don't have time, so we got something like that. Once it breaks, it can go, but gotta give it time. Anybody have any questions about this? Any questions about this? Last week, I was looking at Netflix. We got into Netflix. The setup did exactly what it was supposed to do. Someone made like $3,000, right? But Netflix is another one. If you're going to do it right, it's going to set you back. Them contracts are not cheap. Them contracts are not cheap. Let's see. What else we got? So we got Exxon. We got Johnson & Johnson, which could break. The bull flag could break any moment from now. Costco. Let me go daily. But I don't have anything that I'm too excited about, to be honest with you. Lulu is the most decent one I've seen. Everything else is gone, right? And I don't like to chase. So, PG. So PG, as you can see, I kind of mapped this out, and it looks like it's doing exactly how I mapped it out. It's following, put. It hit this level, and now it's coming down. But I don't like puts, so I'll leave that alone. Wells Fargo, I think I put it in a watch list, or I talked about it the other day. As you can see, Wells Fargo, pretty self-explanatory, right? This is the same thing that happened with SPY, right? Same thing that happened with SPY. So we had it stuck in a wedge. The wedge broke, it retested. Can you guys all see the retest? Yes? No?
You got a reaction.
You see the retest, right? So it was like this. It was like this. Right? You see it. So at no point here are you anticipating anything, right? Real strategic traders will wait for it to break, retest. You see a pin bar at the retest here. This is your guy. This is your signal to get in. You see it? This is your signal to get in. You get in. Where are you putting your stop loss? There are two levels where you can put your stop loss. Stop loss number one. You can put your stop loss right under the pin bar. That is the aggressive level, aggressive placement, right? So you can put your stop loss here. Or you can put your stop loss here. You put your stop loss here. You enter here. First one, your stop loss is here. Your entry is right at the close of when the day was closing, right? When the day was closing. This is a daily candle. So right before market closed, you got into Wells Fargo. Stop loss is right here. Hold on. I have the wrong tracker. Long. Entry here. Right here. You already hit your 2-to-1 risk reward. You get it? Does that make sense? You already get. Now, if you got into an aggressive, let's say you anticipated the move and you got in before it broke out, I don't know. I don't trade like that, so I'm not even gonna speak on that. But if you got in on the pin bar once that red candle started to develop a tail, then your stop loss, aggressive stop loss, will be under that pin. So you could say Wells Fargo 79.65 or something. If it comes down, closes below the pin bar, I want to be out. I'll take my L, not based on percentage, but based on price action. Or if this level was your stop loss, this will be a more decent level to give yourself more room. And with that one, you wouldn't be at 2-to-1 yet. but you still made money either way. Just that your stop here is more flexible. It's not as rigid. But if you're playing it based on this particular candle, it will be like so. And remember, this is not a leap or anything. So you would have gotten into this as a swing trade, maybe 3 months expiration, 4 months expiration, you know, a month expiration, whatever expiration you're choosing. You're doing well, right? You're making money. Don't look at how much money you could have made. Look at the setup, how you played it. Did you trade the right way? Trading the right way is more important than doing the wrong thing and getting rewarded with money. Does that make sense? Like the game I give you here is course worthy information. But unfortunately, a lot of people ain't gonna, they will still feel the need to go buy somebody's stupid ass course that doesn't really say or do much. They give you a whole bunch of fluff indicators thinking you're gonna have an edge. It's really that simple. If you pay attention on these free Zooms, you can do a lot. You know? Any questions? That's Wells Fargo. So I'm not chasing it.
You got a comment. Tap and hold your glasses for number of viewers and most recent comment.
Okay. So
First viewer has joined.
if I don't get a like really nice setup, I don't feel the need to get in. So this is AMD. We gonna watch it at this level here, right? AMD is in a buy zone, but we also have it stuck like so, right? It's in a buy zone, but it's stuck like so. See that? This is a daily level here. So if I highlight the zone, it's stuck here and it's doing this. Lower highs, right? Lower highs. So you don't want to front run it and say, AMD, I'm buying AMD, right? What you buying AMD for? You got to wait for it to do it. How would you approach AMD? Anyone?
Reversal.
Break that resistance and come back and retest it as support.
Or put.
Reversal.
Reversal of what?
Wait for the reversal.
Yeah, but where?
Right there at the support.
At this support down here.
Well, it's already at that support already.
No, it's here.
That green.
It's here. Hold on. Let me see.
Okay, because I see two lines.
It's here,
Okay.
right?
Where's it been bouncing off of 148, so that's what I would wait to get in back at 148.
And here so far, the momentum is down, right? So it can get pushed. That's why I drew these lines.
Further
So
down,
yeah, so it's like this. Look, every time it comes to here, the highs are getting lower, right? So this is not a level for you to buy until it breaks out. So you don't want to assume it's gonna break out because you don't know you don't know that. And we don't want to predict. We want to go with whatever the market is telling us, not what we want the market to tell us, right? So based on this, it can easily get pushed down and make another higher low and keep doing this, right? So if it comes to this level here and you get a clear bullish price action candle somewhere here, you can buy, but you're going to face some sort of resistance immediately. Are we making sense? And that will not give you a 2-to-1 risk reward. That is where the 2-to-1 risk reward comes in. So it's not that you can't make money. It's just that it's not a high quality setup. We making sense? You can make money with anything. You can risk 10,000 to make 500. You made money. It's just a crackhead way to trade. You know, so basically, if let's say you get a candle here and your next resistance is at 157 and you get in, let's say you get in right here based on, let's say, a pin bar, right? If you come here and you measure, let's say your pin bar is here. Your entry is at 154. Your stop loss is here. That means your take profit or your resistance zone is right on top of your head. You see that? So this is what you're going to be looking at. If you get in here, and let's say your stop loss is under that candle here, but you know that because of the way it's moving, it will likely face resistance. This will not be a good trade to get in at that level. It doesn't mean AMD cannot go up, but the setup is not ideal. We making sense? Blockchain bait AI. You made it here?
Yes, I did, but I'm having an issue with my chart because my chart doesn't look like yours. I see the green. I see, I see a green candle. But I'm trying to see where I would see that long red candle at. I have it on the daily. So I don't know what's going on with my chart.
So your chart is not reflecting what I'm looking at?
No, because that last candle that you have is red. And
it's a doji. You're talking about this one. The very last one that looks like the upside down cross.
Okay, hold on for a second. Okay, yeah, I couldn't see that on there, but for some reason, I don't know why it's showing me the last one is a green doji from what I see, and then it had then before it had a long green candle.
Do you pay for TradingView or?
Yeah, I do.
You actually, okay. Do you pay for the, do you do an extra, do you pay monthly for the real-time feed?
I pay for the year. I pay for the year, and I have the highest one because I bought it on Black Friday.
Okay, yeah,
now
but
I'm pissed off because I'm wondering why my chart doesn't look like that.
Yeah, but that's what I'm saying. There's also a monthly $10 that you have to pay to get the real-time feed. Otherwise, every time you're looking at the chart, it's delayed by 15 minutes.
Oh, okay. I thought it had the highest one. It's supposed to have the.
Yeah, but it doesn't come with the Let me show you, because that's the same one I have. It doesn't come with.
So I have to pay an extra $10.
Yep.
But it's live when the market's open, isn't it?
Yeah, it's live, but it's delayed by 15 minutes if you don't pay. So if you don't pay, everything you see in is 15 minutes, like, delayed. You know, so if you're using it to trade.
Even if I go all the way down, even if I go all the way down to the, even if I go all the way down to the 5 second, because I have.
Yeah, it will still be delayed. What you're gonna be seeing will be in the past. Let me hold on. Okay. I'll show you. Yeah.
I'm looking at AMD. Is she looking at the same chart as you?
Yes, I'm looking at it.
AMD?
Yeah. Yeah, it must be that I gotta pay that $10.
Yeah, I believe it's the hold on.
Because it did close as a doji, but it's saying green, and then it's saying that the last candle before it was green.
A lot of people, whenever they have that issue, is usually that. Let me show you.
Okay, so I guess I'm gonna have to wait till Black Friday then. I thought I had everything.
No, you don't have to wait for that. You don't get it's monthly. Yeah, that part is monthly. So you see over here, on my screen.
Mm-hmm.
So you see, I also have the annual, right? You see it over here. It's a premium, but I pay for real-time market data. So on September 26th, they're gonna take out $9.95. If you are not paying for this $9.95 every month, you are not getting real-time data.
Okay.
Yeah.
Okay, so they're giving me old data.
Yeah, old data.
Okay.
Yep.
So I'm gonna go ahead and do that then.
Yep.
Thank you.
You're welcome.
And I love your content so much.
I appreciate it.
I share your stuff. on my Facebook.
I be seeing it. I appreciate it. I appreciate it. Appreciate the love. Yeah, so AMD, just like Wells Fargo, it's best to wait for it to break and retest, right? Break and retest. And then we have, excuse me. Then we go.
See, and it looks like the same thing, except the candles are a different color. That's what I'm saying.
So you say,
Just those two,
yo,
yeah, it looks like the same thing that I have, but it's just that the two candles are a different color.
Okay, let's go.
The regular candles, right?
Yeah, let's go hourly. So look at it on the hourly and tell me what you see.
Okay, hold on. Let's look at the hour. Let's see.
Excuse me.
Okay, let's see.
Excuse me. 1 second. Yes.
Let me see if it looks the same way. Okay, yeah. Okay. Okay, yeah. Now that looks the same.
It looks the same?
Yeah, that looks the same. Yeah.
Okay. But you're still gonna be delayed though.
Yeah, I need to go ahead and get that other stuff. I didn't know that.
Yeah. Because I think because the market is closed, right? So ultimately your 15-minute is gonna catch up and it's gonna look the same way. But in real time, if you're trading SPY or QQQ or anything like that, and I remember,
I'm gonna need that real
time. You're gonna need the real time, because a few people used to ask me, why is it, because I do the SPY play. Let me show you. So on my Discord. Did you see when I was posting the real time plays last week? So
no, I don't know where it's at.
okay,
I don't know
on the
that.
announcement page, right? Am I sharing the Discord?
Yeah, I'm in the Discord. Let's see.
No, I'm saying it's my screen on Discord.
Yes,
Okay.
I see it. Yeah.
So
It's on Discord. And I see announcements.
okay, so this was posted Friday, right? Because Friday I did a live, and you know we use the day trading 5 minute, 10 minute, 15 minute. So I was posting this in real time, like just like AMD. So this was very similar to AMD, but this is on the 10 minute. So if you are looking at SPY using 10 minutes, you are not going to see what I'm sharing.
Oh, okay.
You see what I'm saying? You're going to be behind 15 minutes. So you're going to be like, why does this chart look like that?
So wow, so it's just been 15, so it's 15 minutes, even if I go lower time frame, it's still 15
Yeah, it's
minutes.
still 15-minute delayed. So you're not getting the,
Oh, I don't like that.
yeah, your feed is delayed. So
I don't like that.
if you're looking at the screen, right? I did this, so if you see the time, this was 11:57. Then I think I posted this at 12:01 because I wanted the people in the wait list to basically see how it's. I was doing it on live, but I had computer issues and my share screen was acting up. So I decided to do like a play by play, like every minute or every 5 minute, just to show that this is the breakout, right? Because if you look at the price action, I think this was a 2-minute chart. So if you were looking at it, you wouldn't see this bullish candle. You're not going to see it when I posted it. It's still going to be behind. You see what I'm saying? Yeah, so we were waiting for this break, and then SPY broke, and I kept updating. So you see over here, it broke, it retested, and then boom, we got in. And if you look at the update over here, broke, boom, right? It went as high as 663. But also, look at where my resistance zone is. What number is that? Tell me, what number is by that line?
But the resistance.
Yeah. What price?
663.97.
Okay. So that means that is the level where I wanted to get out, correct? If I got in here.
Breakout, yeah.
Okay. So if we come here, you're going to see SPY. What did SPY do? This was end of the day. So we got the breakout.
Oh yeah, it reached up to the resistance.
663.91, right? Okay, look at the last screen. What happened here?
All right, it broke out. Well, it wicked.
It wicked. So if you got in,
tried to break out, but
if you got in where we got in, you should have known exactly where we were getting out. So I wanted to do a play-by-play so you understand that I'm getting in, but I already know where I'm going to face resistance. So where I want to take my final profit. So I think I got like 50-60%, and I took profits on majority of the position. I let some runners, and when I turned around, it had hit. I closed here. So I didn't wait for it to wick. When it got here, I was up like 230. And that was my price to close. So I didn't care if it was going to break and go. I've traded according to my plan. If it happened,
I didn't want to get faked out.
I didn't want to get faked out, and I wouldn't have cared if it broke and went to 664. because I'm trading according to my objective plan that I made when there was no money on the line. Because that's what you want to follow.
And you went in there with a plan.
I went in there with a plan and I exited based on my plan. And if it had continued to go and somebody said, hey, I got 500%, I wouldn't care because I followed my plan, right? But it just happened that it respected my level. It's not always going to respect your level like that, but this time it did. And as a trader, it feels good, not based on how much money you made, but the fact that you followed your plan to the T. You know what I mean? So, but yeah.
Now that's one of the things I gotta get good at is SPY. Cause I know people trade SPY every day. I can't do it every day because I work and I work long hours, but I know SPY is something that people trade all the time.
Yeah, because it's very liquid. It's relatively cheap. You can get in and out. You know what I mean? But
it moves fast.
It moves fast, and also, like you said, if you have a schedule like that where you are busy, you don't want to play with no day trades, right? Because you have to be able to be fast. Because some of the moves you can make 30% in like 5 minutes, 2 minutes.
So that's one of the ones that you gotta watch. Not even
yeah, you gotta watch.
Would you place a stop loss and walk away, or no? Not with this one.
I mean, you can, but like we executed on a lower time. So like, let's say with this, if you are getting in on this pin bar, yes, you can, but you still have to watch it because with options, it's kind of hard to calculate, your stop loss. So you still have to watch it to see if it's coming down or if it's going up, and if it's violating your stop loss, you cut it. Let's say it didn't go up and it came down below this doji pin bar. If it broke below this, that would have been an automatic exit. I'm out, right? Because the bottom of the pin bar serves as support. So if it breaks below that, it will likely bleed further, so, but yeah, anyway, yep, so you're welcome. So AMD, same thing, we gotta wait, however long it takes for it to break, it breaks. If it doesn't break, oh well, we're not forcing anything. We're not gonna be like, oh, because it's AMD, let me get in and be hopeful. No, we trade according to a plan, So if it breaks, retest, we go. If this support, breaks, it may break and go down. Anything is possible. So we don't care. We just trade in what we see. Because our opinions can't move the market. It has no weight on the market. So you just want to wait for the market to. Yeah.
Did you get the one that says U.S. stock market bundle?
I believe so. Yes, it's $9.95. It says.
Yeah, but I know there's different ones. There's the NASDAQ stock market. There's the U.S. stock market bundle. Oh, okay. So that one has all of them.
Yeah, it has all of them.
Okay. Yeah, I'll do that one then.
Yep.
Thank you.
You're welcome. Anybody else? Any questions? Like I said, I don't have anything that stands out according to the way I trade, So I'll wait for the market to open. Actually, I'll do some more analysis tonight, map my levels, see what contracts are out there, if it looks good. I like Salesforce. So Salesforce, let's look at Salesforce. So it kind of has a similar setup. It's stuck like so, right? Like so. So it hasn't broken out yet. So let's go to weekly. See? It's getting ready to. It's getting ready to, but it hasn't broken out yet. If you on the west, if you on the Midwest, if you in Chicago, I'm gonna say it finna break, right? But we're not gonna do anything. We're not gonna predict. We're gonna wait for it to break. If it does break from its high, it's down 35%.
You got a reaction.
Right? So if it breaks, CrowdStrike had a similar. Let's look at CrowdStrike. So look at CrowdStrike. You see that? So this shit works. You just have to give it time, right? CrowdStrike. We mapped it. Right? Stuck, break, and it's gone. So if you got into CrowdStrike, and I think somebody did. The person who got in CrowdStrike, are you on here? Somebody did. And they made some decent money. Let me see, CrowdStrike. In the meantime, any questions? So look, so I posted this, right? You can see the date over here. You can see the date over here. So I posted buy CrowdStrike 5/10/10/17. I posted this on August 28th. August 28th. And then I posted the price action. Okay, you see it? So what price was CrowdStrike when I posted this? Say it or type it. I just want you to follow that it was done in real time. What price? It's right here on the side. It says ask. What price was CrowdStrike? $435, right? So $435. And then you see it breaking. So CrowdStrike, here are the contracts. And if you didn't get in, I posted 450/10/17. So when I posted this, the contract was $22,000. Where's my other phone? How much is CrowdStrike now? Can somebody check for me real quick? Ah, damn, where's my phone? Oh. Goddamn, phone died. Somebody check for me. CrowdStrike 450/10/17. What's the cost? CrowdStrike 450/10/17. What is the current cost now? Where's Anitra? Anitra, where you at?
Okay, so you said 4/10/17, 450.
Yeah.
450, that's below the strike price. Okay, so
That means it's in the money now. Or
yeah, the money, yeah. Mm-hmm.
So somebody said 58. Is that right? 56. 56.80.
Yeah. Mm-hmm.
Okay. So
No, 450. The 450 call for 1017, that's, yeah, 5680, yeah.
Okay, so that
The
means
bid,
you've made over 100%. You spend $2,000. The same contract is worth $5,600. Almost six. In how long? I posted this on 10/17, 450.
It's 86 now.
86, right? Theta is about the same, which means for every day you hold it, you're losing about $26. But think about it. You're losing $26, but you almost, this shit is at 57. It's actually like 5,700. So the $26 you're holding, it's not gonna hurt you, because every $1 that this contract, if this stock goes up, you're making about $86, and you turn around and lose 26. So long as the stock doesn't stay flat, you're making money, even with the theta decay, right? And you already made enough money that at this point, you can exit. You're almost at 200%. Okay, let's look at the other one. The other one. So I also posted a 510. This one did not cost us much. This one was $485. How much is this now? Somebody check for me. How much is this right now? This would have cost you $485 3 weeks ago. It's $1,700 now, right? So 1735 divided by 485, 300%. 485. Yeah, about 200 and something. You know? Very simple. Let's look at the Greeks on it. Let's look at the Greeks on it. So this is 510, 1017. And delta is now 47. Theta is 41. But at this point, right? At this point, you've made money. So you exit if you want to exit. There's no reason. A lot of people feel like, okay, I still got time. But what has your time got to do with anything? You put up, the contract is worth 1735 minus your 485. You've made 1,250 divided by 485. You've made 250% pure profit on your investment. So are you taking this money, or are you trying to hold it for more because you got about 3 weeks to go? And this is a question I'm asking you. What are you doing?
I'll take my money and slide out.
Yeah, 250%. That's a lot of money. And remember, your 250%, you made $1,200, right? You might think it's not a big deal. But remember, the gurus that are posting, they are up 100K and 80K and 200K. Look at the percentages, right? Don't look at the dollar amount. Look at the percentages. Because if you bought over here times 100 contracts, that would have been 48,500, right? If you bought 100 contracts, that would be 48,500. That same 100 contracts is now worth times, what did we say that the cost is? 1735. Yep. So your 48 is now worth how much? Now I want somebody to tell me. Done something special, rich from this. The 250% is as good as it gets. Even if you get an extra 50% more, it's still not going to make you rich. You know what I mean? It's the capital that's going to make a huge difference. But more importantly, the skill set to be able to spot something like this, make money, turn that 1,700 into maybe $4,000, then grow that $4,000 to 10 grand, and eventually you're gonna get to the point where you're able to buy multiple contracts. You know, so I just wanted you guys to see that. I posted this as real time CrowdStrike 828 different contracts. So I posted this contracts for the people with limited funds, because not everybody can spend $2,000, and some people made money. Let me see who made money. But yeah, while I'm looking at this, any questions? Any questions? Who was it that got into CrowdStrike? Any questions? Any questions? Gold. Karsi or Ghana, or how did Oracle go? How did Oracle go for you?
Oracle, I got my money back. Thank the Lord.
That's good. Did you make any profit?
I think very little. I didn't really do the math, but I also jumped into puts at some point too. So.
Oh, okay.
I'm
So you, okay. So you actually, because I was wondering, I'm like, is she making money or what was it again? Oracle. So hold on.
Thank you too.
You're welcome. So Oracle, let's look at it again. But I think it might be going now, because you know they basically bought TikTok. If you want to simplify it.
So what's their connection to TikTok?
I think Oracle basically controls, I don't know the deal, but I think they are the ones servicing everything. Hold on. I think it's going to have a major effect on the stock. How much is it trading right now? Oracle. Yeah, so after hours, it's still at that same level. You remember the level we were talking about? 312?
Your first viewer has
So Oracle 312. So 312 it's still here. So it basically needs to break above here. If it can break above here, I think it's gonna go because of the news, because of the TikTok, whatever somebody said, controlling shares. Yeah, I think I read somewhere on CNBC that the deal is done. It's basically done. You know, so it looks like this. So for Karen, wait, how you from Ghana and you need to change that name.
Stop.
I'm the black cat.
Black Karen is crazy. Do people joke? Do people joke with your name? Is that your real?
Always.
Is that your real name?
Especially when I start complaining over the phone and they're okay, fine. What's your name?
Karen.
Old name.
That's crazy. That is crazy. But yeah, so if you look at the price action, this is the level I talked about, right? I was like, if it comes here, it has to break, but it couldn't break, right? It couldn't break and it dropped. So if you did it, that's you did well. So did you do the put here when it came to 312? So you
Oh, I have to check. Let me open it.
okay.
So
So
I don't even look if I've sold everything. I don't even know.
yeah, so it's back at that same zone. But if it can break and retest and stay above, I think it goes back. I think it goes back. So, and you said gold, but let's look at the one Ian Dunlap said it was dead. What is that? Intel.
Oh, what to say? We just talking about Intel.
Yeah, he said it was dead. And I think the reason why sometimes I'm so petty, man. I think the reason why I called Intel was probably because he said it was dead about a year ago. So let me show you. So we got into Intel leaps about a year ago. I posted it. Tia, is Tia on here? Is Tia on here or no? And you know, Trump started talking about it too, heavy. So Trump be joking, but there's always clues, right?
You got a comment. Tap and hold your glasses for number of viewers and most recent comment.
So look at Intel, right? Over here. This was 8/8/24. So this was 8/8/24. So not this year, but last year, right? We got an Intel. I said some swings and some leaps. Choose whichever one you want to get into it. So, you know, I just want you to know we don't follow the news. Most of the time we're going to be ahead of the news because we price action traders. The news, the charts, if you study it well, you will see signs before the news breaks out. All right, let me look at gold real quick. GLD. So gold has been going crazy. Let me look at it on the higher time frame. Yeah, I ain't doing nothing. I ain't doing nothing with this shit.
I've been trading gold on the crypto side, futures with crypto futures with PAX G, and that's been doing really good because PAX G matches. They actually tokenize their gold.
Got you. Yeah, I mean, I'm not saying it's bad. It's just that the way I trade, it's too high for me. Right? It might continue to go because if you look at it, it broke a bull flag or a bull pennant and it's going, right? And so gold, you just pay attention to it, right? It has its own characteristic. So whenever it pulls back and does this again, it will likely break. Just look at how many times it does that, right? Just look at it. It gives you that flag and it breaks. Then it will retrace, consolidate, then it breaks. So I think it may hit 400 by end of the year, right? So let's say it goes up and it does this. I believe it will break again and go. right? Break again. But I like to trade from higher time frame. So looking at the higher time frame, weekly or 2 days is too high